Hello, very good dear subscribers, and welcome to a new video on the channel. Today we have the special monthly video reviewing my portfolio starting from €0 with you. Get ready to discover my first pick of 2025. As always, first I would like to analyze a little about the evolution of the YouTube channel and how I see it in a couple of months. As you can see, the evolution during this last month has been so positive since we grew more than I expected in the daily number of visits, and we have experienced a high increase in daily new subscribers. That is due to the fact that in the last 2 weeks one of the shorts that I have uploaded went viral, reaching more than 2 million views and gaining more than 1,000 new subscribers. Wow! As a result, this month we have reached the goal of reaching 1,750 subscribers. So for this month the goal will be to reach 3,000 subscribers. Do you think we will make it? The evolution of the investment made last month has not been good, as it has fallen more than 5% after 10% upside during November. Additionally, in overall the portfolio has performed in a very poor way. Comcast, Vici and Starbucks are the worst performers this month with over 10% decrease, while none of my investments have experienced a positive evolution during this month. The good news is that during this month we have received 6 dividend payments. Specifically €1 of Johnson & Johnson, 50 cents from Texas Roadhouse, 84 cents from NextEra Energy, €1.10 from Hershey and €1.01 from T. Rowe Price. That makes a total of €4.45, which continues growing when we compare with last year December month. This month I will add a company that I don't have in my portfolio in order to increase my diversification, and due to the no exposure to European companies in this portfolio, and also bad momentum to invest in US companies with euros, I decided to add a new company. That is why this month I am going to only analyze one company. This company would be Eurofins Scientific, that had an impressive drop down during 2024. Eurofins Scientific is a global leader in analytical testing services, offering over 200,000 methods across industries like food, environment, pharmaceuticals, and clinical diagnostics. Founded in 1987, the company has grown to 62,000 employees in 62 countries, leveraging innovation, R&D, and acquisitions to support clients' quality and regulatory needs, with consistent revenue growth and membership. Let's start by checking the dividend safety. When we look at the free cash flow payout ratio over the last 5 years, we can see that it always has a ratio below 40%, increasing the dividend per share if free cash flow increases and decreasing when free cash flow is suffering a downside. This reflects the company's commitment to pay the dividend without increasing the amount of debt. Regarding dividend yield, during 2024 dividend cut, the company went to the average 5 years dividend yield value around 1%. This can be so low for some investors, but this company is not a consistent dividend growth payer company, instead uses its 15% to 20% of their free cash flow to pay dividends and the rest to continue the company growth levels. Continuing with the evolution of the revenue and earnings, this one has been no so good during the last few years, because with the same revenue the earnings decreased by a half. Now, if we look at the evolution of free cash flow over the last 5 years, it is also not as good as I am expecting in one company, but during the trailing 12 months the situation turns to positive. As I mentioned in my previous videos, I want to make investments in companies that make buybacks. In this case, the evolution is very clear with no buyback program, having the same amount of shares outstanding since 2019. The price/earnings ratio is a good indicator to check whether a company is undervalued or overvalued, in addition to a fair value analysis. Eurofins Scientific is below the 5-year average price-to-earnings ratio. While looking to forward P/E, we can see that it's expected an impressive growth for the next year with a value below 15. Moving on to shareholder yield, here with almost 2% yield and above the 5-year average indicates that Eurofins is more active in regarding shareholders through buybacks, dividends or total debt reductions. Additionally, looking at the financial health during 2022 and 2023, leverage levels increased to concern values in free cash flow terms. But during 2024 the company managed to increase again their free cash flow and now is only slightly above. Once most of the important metrics have been analyzed, then we enter the Scalable Broker and carry out the operation, looking for the ERF ticker. Remember that I will always try to make a purchase above €100 so that the fee is less than 1%. Putting 3 shares would be an investment of almost €140. Well, we go on to write down the purchases made in our Google spreadsheet. So I put the date on which I made the purchase, the Eurofins Scientific ticker, and finally I have to look at the euro to US dollar exchange rate to have it as a reference. As you can see, it gives me a total of €138.96, adding the 99 cents fee. Placing the ticker in the first column, it automatically added the number of shares and the average price per share. We add the healthcare sector reference in the column, and as you can see, we have more than 5% upside. Additionally, this investment will allow us to reinvest 0.03 shares annually via dividends. As we are already in the month of January, I will move on to the monthly value sheet, and in the month of January 2025 we will write the €2,718.33 that our investments are worth in the market. That is because I made 2% more that we will see in the following months. This month the portfolio made a downside of 5.47%, which is below the minus 2.60% that S&P 500 has obtained in the same time period. So this month we underperformed the market again. Also, as we are already in 2025, going to the annual value sheet, we can see that the return obtained is 6.02%, while the S&P 500 in the same period made more than 24%. This huge gap is due to the fact that the way I have calculated the profitability is very simple. Adding the market value at the beginning of 2024 and the amount invested during 2024, and comparing it with the current market value. Because the contributions I have been making amounted to around 5% of the total portfolio, the profitability obtained decreases considerably. For example, if before making the investment we had €1,850 invested and €350 of profit, it meant a profitability of 18.92%. But by adding a new investment of €150, the amount invested becomes €2,000, while at time zero the profits would still be €350, so the profitability becomes 17.5%. To obtain a more precise return, we would need the price at the beginning of the year of all investments made in 2023, and then annualize each return of the investments made during 2024, which would give an approximate return of 15% without counting dividends. That is also below but not as bad as the 6%. Finally, I want to review whether we met the goals we set at the beginning of 2024. The first goal was to reach $2,000 invested by the beginning of 2025, and we currently have more than $2,250. The second is a little more difficult to measure, since it was to invest in companies that would increase their dividends during the next 20 years, that is, between 2024 and 2044. So until 2044 we will not know if it will be met, although so far during this year all companies have increased theirs. The third goal is the only one we have not met, although we have come very close to the 15 companies in which I wanted to be invested by the beginning of 2025. Specifically, we have 13 companies and an ETF. Finally, and to my surprise, we also reached the goal of $75 in dividends expected during 2025 for just $1.36. Seeing that we have met most of the objectives, for 2025 they will be the following. First and foremost, I am committed to consistently investing a minimum of $150 per month, with the goal of reaching a total investment of $4,000 by the end of 2025. To maximize long-term returns, I will repeat the same goal as having chosen last year. Invest in dividend growth stocks that I believe possess the potential for sustained growth over a minimum of 20 years. Additionally, I am implementing a well-rounded diversification strategy by ensuring representation from each sector in my portfolio, featuring a total of 20 carefully selected companies. This approach aims to mitigate risks associated with industry-specific fluctuations. Ultimately, I aspire to achieve an annual dividend income of $125 by 2026, reflecting both a prudent investment approach and a steady progression towards my financial objectives. This has been all for today, dear investors. A pleasure, as always, to receive your great support. Remember that these videos are not investment recommendations, and it is necessary for each of you to do your own analysis and consult a financial expert if necessary. If you like the video, don't forget to subscribe, hit the like button and activate the bell so you don't miss any of my interesting videos. Thank you for watching the video, and tell me through the comments what you think my portfolio will look like next month.